Income receivable. Treatment of income receivable. Underline. First of all, let us try to learn the entries relating to incomes. Write down. When income is received in cash, when income is received in cash, what is the entry will pass? Cash or bank account debtor to income account. It can be interest income, it can be rent income, it can be dividend income, okay, it can be commission income. You are receiving an income in the form of cash. What is the entry will pass? Cash. When income is received in cash, cash means cash or check, cash or bank account debtor to income account. So when amount is received in cash, this entry will pass cash or bank account debtor to income account. Okay. Income can be interest income, commission income, rental income, okay, any other income. So whatever income you are receiving, this is the entry you have to pass. Next, when income is receivable, when income is receivable but not received, or we also call it as income accrued or income accrued. Now suppose a bank has given loan to thousands of people. Bank has given loans to thousands of people. Now on the loans provided, bank is going to collect interest from thousands of customers. Are you able to understand? Now suppose in the month of March, or let us suppose in the month of December 2014, the bank has to receive interest from customers. The customers have not yet paid the money. Customers are going to pay money in January 15. Bank has charged interest for December 14. On 31st December 2014, bank has charged some interest because you have given loans. So bank has to recover interest. For bank, interest is income. So they have charged interest to customers, but customers are paying the money in January 15. So when should the bank recognize interest as an income? In the year when they have charged the interest, or in the year when they are recovering interest from the customer? The interest is calculated by the bank on a daily basis. Every day bank is going to calculate interest. For every day they are going to calculate interest. On December 31st, they will calculate interest for the entire month of December and they will pass an entry. They will charge it to the customer. But customer will pay sometime in the month of January. So the question arises, when should the bank record an entry? On the day when they collect money, or should they record the interest in the month of December itself because the interest belongs to the month of December? December interest received in January. When should bank record it interest as an income? In the month of December because interest relates to December, or in the month of January when the bank is collecting interest? When should you record it? The interest should be recognized in the period in which it is earned. Bank is earning interest every day. Interest relating to December should be recorded in the books of December itself, or in the books of the accounting period in which this month of December is lying. Suppose bank is following calendar year's accounting period. From 1st January to 31st December they are preparing their accounts. So December month interest should be shown in the accounting period starting on 1st January and ending on 31st December. You cannot record interest in the next accounting period because money is being collected in the month of January. Okay, so we have to record interest in the period in which it is earned, not in the period in which it is collected. So what is the entry we have to record for the month of December? You have to charge interest. The bank has earned interest and bank has to recover money from customers. So we know that the interest has been earned. It has to be recognized as an income in our books of accounts. So immediately credit income account. Income account should be credited. Income account means interest account should be credited in our example. But the money has to come from how many people? Not from one or two people, from thousands of customers. The customers have to pay money to us. They have to pay money to us. They are our debtors. Bank's money is there with the customer. Customer has to pay the money to us. So till the time customer pays money, we have to remember him as a debtor in our books of account. So in place of writing the name of each customer, we write income receivable account debtor. What we do is we'll put a register called as interest receivable register, and in that register we are going to write the name of each and every customer who has to pay interest to the bank. Instead of writing the name of the customer as a debtor here, we write the name of a register called as income receivable. So what is the entry we pass when income is accrued? Income receivable account debtor to income. We are recognizing income in the period in which it is earned, not in the year in which it is collected. So income belongs to the current period, record it in the current period. Money is not collected, so till the time money is collected, we have to remember the customers as a debtor. Okay. So what is the entry will pass? Income receivable account debtor to income account. Income belongs to current accounting period, hence we have recognized it in the current accounting period. Money is not collected, hence we are remembering customers as our debtors. We don't write their names, we use the account income receivable account. Income receivable account is a representative personal account. It is showing debit balance. They are debtors. They have to pay money to the business. They have to pay money to the business. Income account is a nominal account. Is it clear? Below the entry, we will write down that income receivable is a representative personal account showing debit balance. It is an asset for the business. It is an asset for the business. No, business receivable is a separate asset. This income receivable. Whereas income account is what? A nominal account, income. Okay, it should be transferred to the P&L account. This should be credited to P&L account. This should be shown in the balance sheet, asset side. Are you able to understand? This is income shown in P&L account. This is asset shown in balance sheet, asset side. Write that point also. Income receivable will be shown in the balance sheet, asset side as part of current assets. Because money is going to be collected within the next 1 year. Whatever interest we have charged, will you wait for 1 year? Next month we are going to collect it. Next transaction. When income receivable is received in the next year. When income receivable is received. Income receivable is received in the next year. So now after some time, the bank is going to run after these customers. Customers, we have charged interest for December. We have not paid money. Please start making payment. So bank will send reminders to the customer. So next month, that is January 15, customers will start paying money to the bank. So bank is receiving the accrued interest now. What is the entry right now? Write down. Cash or bank account debtor to income receivable account. Now debtor is paying money. Income receivable is nothing but a debtor account. Debtor is paying money. Personal account, giver, credit. Cash or bank is coming in. Personal account, receiver, debit if it is bank. If it is cash, real account coming in, debit. So write the entry. cash or bank account debtor to income receivable account. Cash or bank account debtor to income receivable account. When will you pass this entry? Not in the books of the current year, in the books of next year. Write that. This entry will be passed in the books of next year. Look at the board, everyone. Accounting period for a bank. Let us say a bank starts on 1st January 14, ends on 31st December 14. Suppose January month interest is charged on 3101. It will be collected in the month of February. Interest for February will be charged in February, collected in March. March is part of accounting period. March month interest will be charged in the month of March, but will be collected in the month of April. April month interest will be collected in May. May month interest will be collected in June. June month interest will be collected in July. July in August. August in September. September in October. October in November. November in December. But December month interest on 31st December, bank will see your ledger account, your loan ledger account. They will calculate in December month for how many days, what was the balance in your account, in your loan account. They will calculate interest and they will pass an entry. But when will they collect the money? January. If it is possible, in the month of December itself. But most probably they are going to collect the money in the month of January. So the question arises, December month interest, when should it be recorded as income in the books of the bank? In the month of December itself or in the books of next year? We have to record it as income in the books of accounts for this accounting period only, because December is part of this accounting period. Hence December interest should be recognized as income in the books of accounts maintained for the period from 1st January to 31st December. Money may come in the next accounting period. Is it clear? Yes. So please tell me now. Let us revise the entries once again before we go into problems. Tell me what is the entry a company will write when it receives rent. Suppose a company has a lot of properties. All over the city they have a lot of buildings which they have given on rent to a lot of tenants. You see, if you take the example of the same building, downtown mall, you have 250 units. The owner has given it on rent. So now, if a company has given its buildings on rent and it is receiving rent from its customers, from its tenants, what is the entry we pass? Cash on bank account to rent account. Okay. Suppose in the accounting period, last month rent, the company has asked the tenants to pay, but they have not yet paid. They will pay in the next month. What is the entry will pass for rent accrued but not received? Rent receivable. What is the entry will pass? Rent receivable account debtor to rent account. See, the company which has given the building on rent, it cannot keep on writing the names of 200 tenants as debtors and then give credit to the income account. The rent is earned for a particular month. The month belongs to the current accounting period. Hence, rent has to be immediately recognized as an income in our books of account. But money has not come. So, till the time money comes, we have to show the tenants as our debtors. Okay. Instead of writing the names of all those people, we just write the entry rent receivable account debtor to rent account. Rent receivable account is a personal account showing debit balance asset. Rent account is an income account credited to profit and loss account. Now, next year, rent receivable is collected. What is the entry you pass? Cash or bank account debtor to rent receivable account is the entry you pass. What is the entry you pass? Cash or bank account debtor to rent receivable account is the entry you are going to pass. Is it clear, everyone? I would understand. Next, I want to start doing some problems. Write down extract of a trial balance. Extract of a trial balance. Particulars, debit, credit. You are given rent, credit balance 1 lakh, commission credit balance 50,000. Only two items are given. Rent, credit balance means income. Commission, credit balance means income. Okay. Adjustments. Rent receivable not recorded 1 lakh, not 1 lakh, 20,000. Second adjustment, commission receivable not recorded 50,000. What sir? Not 50,000. 10,000. Commission receivable not recorded 10,000. Okay, tell me how rent account is showing credit balance in trial balance. How commission account is showing credit balance. How did they come into the trial balance first of all? How did they come into the trial balance first of all? That is the question. During the year, we have received some rent. When we receive rent, what is entry we pass? Cash account to rent account. Rent account is credited. It is showing credit balance. Hence, trial balance we are showing credit balance. Yes? Similarly, commission, how is it showing credit balance? During the year, we have collected some commission. Cash or bank account to commission account. Commission account is credited. Commission account is showing credit balance. Hence, it is appearing in the trial balance. So, these are collected already in cash. These are already collected in cash. Okay. But what is the adjustment providing? Some rent is receivable, 20,000 not recorded. Accountant has failed to record rent receivable to the extent of 20,000. Similarly, has failed to record commission receivable to the extent of 10,000. Are you able to understand? So, how are you now going to complete? Let's start. Both these items generally appear in the profit and loss account. Profit and loss account, balance sheet. Now tell me, where do I show rent? Where do I show rent? Inside indirect income, P&L account, credit side. I will write it in the inner column because there is an adjustment. By rent, inner column, 1 lakh. Commission is showing credit balance. Where should I show? Profit and loss account, credit side. Leave some space below rent. By commission, 50,000. By commission, 50,000. Now read the adjustments. Adjustment number 1. What is the adjustment? Rent receivable not recorded. How much?
20,000.
Rent receivable not recorded 20,000. Please tell me what is the entry we should actually pass for rent receivable? Rent receivable account to rent account. Pass the entry now. Below the balance sheet, we'll pass one entry. Rent receivable account debtor to rent account. We are showing the tenant as a debtor, and even though money is not collected, rent is being shown as an income because the income is earned in the current accounting period. The income belongs to the current accounting period. Hence, we have recorded in the current accounting period only. Okay. So, income account is credited, money is not collected. Hence, the tenant is shown as a debtor. Okay. Now, because of this entry, what will happen? In the background, rent receivable account will be opened. Yes? Because of this entry, a new account, rent receivable account will be opened. That account will be debited. Posting of this entry, 20,000. Wait. If you close this account will show a debit balance. Debtor. Where do you show debtors? Balance sheet, asset side. So I'll write here, rent receivable. Balance sheet, asset side. 20,000. Rent receivable, balance sheet, asset side, I'll write 20,000. Next, rent account is credited 20,000. First effect is rent receivable account is debited. This account is showing debit balance, hence shown in the balance sheet, asset side. Next, rent account, it is credited in this entry. Rent account, it's already showing what balance in trial balance? It is already showing credit balance. This entry is asking you to again credit the account. The account is already credited, it is showing credit balance. The entry is again asking you to credit the account. That means balance has to be increased. So go to P&L account, add rent receivable 20,000, outer column 1,20,000. Why did I add? Because this entry is asking you to credit the account. The account is already showing credit balance. If you again credit the account, balance will increase. Hence I am going to P&L account and saying add. Okay. So I am recognizing it as income and as receivable. Okay. Read the next adjustment.
Commission receivable not recorded.
Commission receivable not recorded. How much?
10,000.
Commission receivable not recorded, rupees 10,000. What is the entry you pass for commission receivable? Commission receivable account data to commission account. Write down. Commission receivable account data to commission account. Commission receivable account data to commission account is the entry you are going to pass. How much amount?
10,000.
Commission receivable account data to commission account, we are going to pass this entry. Now because of this, what is going to happen? Because of this entry, commission receivable account will be opened, it will be debited, it will show a debit balance. It's a personal account showing debit balance. Hence it should be shown in the balance sheet asset side. So right here, commission receivable. $10,000. First effect, commission receivable account will be debited, it will show debit balance, hence shown on the balance sheet asset side. Next, what should you do? Commission account should be credited. Commission account is already showing a credit balance, see the trial balance. Commission income account is already showing credit balance. This entry is asking you to again credit the account. That means balance has to be increased. So go there and add commission receivable 10,000. So this is how you deal with commission receivable when it is not recorded. While preparing your finalizing your final accounts, if you find that some income is receivable but it is not recorded, so how should you deal with it? Add it to income and show it as receivable. Next extract of a trial balance. Next extract of a trial balance. Interest, credit balance 5 lakh. That's it. Adjustment number 1. Accrued interest not recorded 1 lakh. Interest showing credit balance 5 lakh. accrued interest not recorded, showing credit balance of 1 lakh. Accrued interest 1 lakh rupees. What is the accrued interest? Interest earned but not yet received. I have earned my interest but I have not received it. So how am I going to deal with it? Again, prepare a small profit and loss account and prepare a small balance sheet. Now where do I show interest income? Interest income is shown on the credit side of the profit and loss account. By interest 5 lakh. By interest credit balance 5 lakh. In the profit and loss account you will show in the inner column. Next, accrued interest not recorded 1 lakh. How do you deal with it? You have to pass an entry now. What is the entry pass? Interest receivable account debtor or accrued interest account debtor. Accrued interest account debtor to interest account. How much? 10,000. 1 lakh, sir. Accrued interest account will be debited. It will show a debit balance. It is an asset for the business. Then shown on the balance sheet, asset side. Accrued interest 1 lakh. The first effect is over. Second effect, interest account should be credited. Already the account is showing credit balance. If you again credit the account, balance will increase. Hence go to the P&L account and say add accrued interest 1 lakh. Outer column 6 lakhs. Next, extract of a trial balance. Next, extract of a trial balance. Write down rent credit balance 1,20,000. Suppose you are given extract of a trial balance as on 31st December 14. Rent credit balance 1,20,000. Rent receivable debit balance 20,000. Commission credit balance 60,000. Commission receivable. Commission receivable 10,000. No adjustments. You are not given any other adjustments. Now first of all try to understand the trial balance. What does this trial balance mean? You are showing rental income 1,20,000, rent receivable 20,000. That means total rental income was 1,20,000, out of which 20,000 is not yet received. That means received is how much? 1 lakh. Similarly, we are showing commission income as 60,000, but we are saying receivable 10,000. That means out of 60,000, 10,000 is yet to be received. That means 50,000 is already collected. Out of 60,000, 50,000 is collected, 10,000 is receivable. Are you able to understand? Now, please tell me, will you again add rent receivable to rent account and commission receivable to commission account? Now, please tell me, how did rent receivable and commission receivable come into the trial balance?
Already.
How did they come into the trial balance? Already ledger is there. How is the ledger there? Entry is already passed. If entry is passed, that means posting is already given in both the ledgers. So you need not do anything now. You have to just take rent, nominal account, P&L account, rent receivable, asset, balance sheet asset side, commission, income, P&L account, commission receivable, personal account, asset, debit side, asset side. That's it. Okay. So now Rent, where will I show rent? Profit and loss account, credit side. Can I write it in the inner column now? I can directly write it in the outer column. 1,20,000. Next, rent receivable 20,000 showing debit balance. Debtor, tenants, they have used our premises, they have used our building, but they have not paid money. Hence, they are our debtors. So they have to pay money to us. Where will you show that? In the balance sheet asset side. Rent receivable, balance sheet asset side, 20,000. Next, commission account, 60,000 credit balance. It's an income. P&L account, credit side. By commission, 60,000. Where do I show commission receivable?
Asset side.
Balance sheet asset side. Not 60,000. 10,000. Should I add again rent receivable here?
No, sir.
Should I add commission receivable again here? The answer is no, we don't require to add it. Because it is already included. Next problem. Now you should tell me what is the problem. You have to frame the problem. Extract of trial balance. Particulars, debit, credit. Tell me now, what should I write in the balance, in the trial balance? Very good. Interest, how much?
6 lakhs.
6 lakhs. Very good. 6 lakhs you have to write. Credit column. Next. Interest receivable.
1 lakh.
Interest receivable. Debit 1 lakh. No adjustments. How will you deal with it? Interest. Showing credit balance 6 lakh. Where will you show it? Profit and loss account. Credit side. By interest. 6 lakhs. Where do you show interest receivable? Balance sheet, asset side. Interest receivable, balance sheet, asset side. 1 lakh. Over. Well, frame one more problem. Write down. Extract of a trial balance. Adjustments. You are given interest, credit balance 5,75,000, interest receivable, debit balance 75,000, interest receivable not recorded 25,000. So there is some interest receivable which is recorded, there is some interest receivable which has not been recorded. How do you deal with this kind of a situation? Accountant has already recorded entry for interest receivable 75,000, but he has forgotten to record entry for some more interest receivable 25,000. How do you deal with it? Maybe 2 months he has recorded, 1 month he has forgotten to record. How do you deal with it? Interest. It is showing credit balance, income, profit and loss account. By interest, inner column 5,75,000. Where will you show interest receivable? Balance sheet asset side. Receivable. Interest receivable. Balance sheet asset side 75,000. You can show in the inner column. What about this interest receivable adjustments? Interest receivable not recorded 25,000. You have to pass an entry now. What entry pass?
Interest receivable account interest account.
Interest receivable account attached to interest account. How much? 25,000. Interest receivable account attached to interest account is the entry you pass. So now how do you show it? Interest receivable, the account should be debited. It is already showing a debit balance. If you again debit, balance will increase. Where is the account already sitting? It is sitting in the balance sheet. So go and add there. Add interest receivable. Another 25,000 please add. So total in the outer column will show 1 lakh. It was hiding in the balance sheet. So we have gone there and then we have added it. Next, interest account should be credited. Balance has to be increased. Where is the account hiding? P&L account. So go there and add receivable. Outer column 6 lakhs. Why did I not again add 75,000 in the P&L account? It is already included. It is already included. Now seeing the entire problem, can you tell me how much interest was actually collected in cash during the year? How much interest was actually collected? How much interest was actually collected during the year? Out of 575 income, 75,000 is not collected. That means 5 lakh is collected. This 25,000 is however not collected. So out of 575, 75 is not collected. Hence interest collected in cash is 5 lakh rupees. Is it clear? Next. So with this we finish the topic relating to treatment of income receivable. If it is given inside trial balance, if it is given outside trial balance, if it is given both inside and outside trial balance. Next. Right on the next topic. What is the next topic?